Anytime you sell or exchange or swap one cryptocurrency for another cryptocurrency or a stable coin, or just simply go to fiat, you experience some sort of gain. Hopefully it's a positive gain. It could be a negative gain, which we call a loss. Now, of course, if you're selling a stable coin, hopefully that gain is zero. But every time you sell, exchange, or swap, now this is very important because one of the greatest misconceptions that US crypto traders have is that I'm only taxed when I go to fiat. And that's not true. Anytime you give up ownership of one cryptocurrency to get something else, you have experienced some gain or loss from your original purchase price. So that gain or loss is subject to capital gains tax in the US. Capital gains tax in the US is based on two things, basically how much other income you made and whether or not you held the asset more than 1 year before you sold it. If you hold it longer than a year before you sell it, then your tax rate is substantially reduced. That's the difference between short-term and long-term capital gains, and it matters a lot. A second misconception people have is that I'm not taxed on staking rewards or airdrops that I receive. This is a misconception because the IRS has taken the position that that's income in terms of the fair market value in US dollars on the day you receive it. That's all considered income, and you're subject to tax at your ordinary tax brackets on that. Now, some people will raise the question of, well, this coin that somebody gave me was worth $1,000 when they gave it to me, but now it's worth $1 because it was a junk coin to begin with. The way we would answer that is, what was it worth in fair market value terms? Just because they said it was worth $1,000, the market would say, maybe from a fair market point of view, that nobody would have paid $1,000 for that, or a knowledgeable buyer would not have paid that, a knowledgeable seller wouldn't have sold it. So that's how we address that relative question. Once you've received a staking coin, you then hold it, the price goes up or down. You are then subject to capital gains tax on the amount the price went up or down after you received it. So that's not double taxation, but it's an additional taxation on the gain or loss. If you have a lot of losers at the end of the year, then I would suggest before December 31st that you dump them all. And you have to make a reasonable attempt to dump them. And there's people who buy junk coins, and you should find them and sell all your junk coins at the end of the year in order to claim and maximize the amount of loss you can take.